In this presentation, we will create another invoice. This time, as we analyze the effects of the invoice, we'll be taking a look at the trial balance rather than the balance sheet and the income statement. The trial balance, of course, having all the accounts on it, great report to go back to and check your numbers, especially when you're entering something that's going to have an effect on both balance sheet and income statement type of accounts. Time to engage with Sage 50 Cloud Accounting. Here we are in our Get Great Guitars file. We're going to go up to the customers and sales information, and we're going to be entering another invoice. This time, let's take a look at the trial balance. We're going to analyze what's going to happen with the trial balance. Then we'll enter the invoice and think about what's going to happen to the accounts. Then we'll take a look from kind of an audit perspective using the trial balance, drilling back down onto the source document, that being the invoice. So let's go down to the accounts or reports and forms. And we're going to go down to the general ledger. I believe it's in the general ledger, the GL. And then let's take a look at the working trial balance. The working trial balance, that's the one we want. And then we'll do a little bit of formatting with this one. Going to go up to the reports up top. And let's change, we could change the date range, probably specific. Let's go specific date range. And I'm going to say this is going to be, let's make it the end of January. So I'm going to make it the end of January. And then I'm going to say I don't want to include the zero account balances. So no zero account balances. And I think that'll be good. So then we'll say OK. And there we have it. So now we have this nice, much shorter report than looking at the balance sheet and the income statement. So we have the balance sheet items up top, and then the income statement. You can think of it as, of course, the balance sheet on top of the income statement, meaning assets, liabilities, then equity, and then the income statement, including the revenue and expenses down below. And so that's what we will then use to go back and forth. What's going to be the effect on the invoice? Well, we're going to go up to the balance sheet accounts. We're going to say, well, the accounts receivable, it's an invoice. That means accounts receivable is going to go up by the full amount that's going to be owed from the invoice as we create it. Other side, it's going to be going to the income statement. So that's going to be on the bottom of our trial balance. That's going to be down here in income. So that's going to be increasing in the credit direction or increase of income. But it's only going to be going up for the amount that we sell it by, not including the sales tax. The difference between the accounts receivable and the income account is going to be the sales tax. That's going to be in a liability account. So here it is in a liability account up in kind of like the second section of the trial balance, assets and then liabilities. Sales tax payable is going to go up. Also, if we sell inventory, if it's an inventory item, that means inventory is going to go down. That's going to be an asset account up here on the trial balance. So here's inventory. It then should be going down by the amount of inventory we sold, even though that amount isn't on the invoice, because it's going to be driven by the item, and the invoice is going to make it go down. Then the other side is going to be on the income statement, cost of goods sold, way down here on the bottom at this account down below. So let's record it, see if that is indeed what does happen. So then we're going to go back on over here. We're going to be creating another invoice. Let's select the invoice item. Let's make a new one by saying new invoice. And then I'm going to make this large. This is going to be Anderson Guitars. So if we don't have, we have Anderson. There's Anderson. The Anderson, you're over the credit limit too. We're going to keep selling to them anyway. So we're going to say shipping to, and the date is going to be at the 01/12/20. And the due date's 30 days later. So that'll be okay. So that looks good. And then we're going to say the quantity. We're going to sell one, and Anderson's getting an Steinberger solid body, which is an SSB Steinberger solid body. It's a good guitar. It's a nice one. And that'll populate for us. We're got the unit price. That looks good. Tax is going to be applicable. And then we're going to have the taxes down here. I'm just going to make sure that the tax is applied out at that 9.5%. And there we have it. So what's going to happen when we record this? Let's think about just the invoice. Every time I think about it, we'll go to the invoice, and then we'll do kind of like the audit thing. We'll go to the trial balance and drill back down to the source document here. So here we're thinking source document to financial statements, trial balance. Then we'll go to the trial balance, drill back down to the source document invoice. All right, so what's going to happen? Well, we know that it's an invoice. That means accounts receivable goes up. It's going to go up by the full amount of the invoice, including the sales tax of $448.95. Other side, income statement account revenue, it's going to go up by the $410 though, not including the sales tax. The sales tax, the $38.95, it's going to be increasing a liability account, sales tax payable. Also, if it's inventory was sold, inventory is going to go down, but by an amount that's not even on this form, even though this form kind of drives it. the system knows what it should go down by the fact that we have this service item and we enter that, and it's tracking the inventory using a first in, first out method. And then the other side of that is going to go on the cost of goods sold, which is an expense account that's going to increase the cost of goods sold, which will decrease the net income. So let's check it out. Let's record it and then check that out. So we're going to say save that and close this back out, and we can take a look at it all just with the trial balance this time, not having to bounce back and forth from the balance sheet and income statement. So if we just go to the accounts receivable here, I'm just going to double click on the AR accounts receivable. Then we see Anderson, and if I double click on Anderson, then down here there's the 448.95 that is owed by Anderson. And then if I close this back out and we go to the other side, it's going to be on the P&L, the profit and loss. Now I'm trying to go to another report. We don't need to go to another report. That's the point of the trial balance. So if we go on down to the bottom, we see the other side is in the sales. So if we double click on the sales, there's the 410 on the sales. That doesn't include the sales tax now. So if I double click on that, that's going to be the number up here, not including the sales tax. Well, what about the sales tax? It's going to be in a liability account. So if I close this back up and we go into the liability section, assets and then liabilities, it's going to be right here on the 7505. So if we go into that, then we see Anderson's sales tax. So I won't even drill down onto it because we've seen that before. I'm going to close this back out. Inventory also goes down because we sold an inventory item. So we're in a perpetual inventory system. We sold an inventory item, so inventory goes down. So if we double click on the inventory, then we're going to see that Anderson 38 or 328, that's what inventory went down by. We don't see that amount on the actual invoice, but it's being driven by the invoice. The system knows about it through the item that we put into the system. So we're going to close that back out and close this back out. Other side of that, on the income statement, which is on the very bottom down here in the cost of goods sold. And so there's the cost of goods sold. There's the other side of it for Anderson, the 328. So just note that the trial balance, look how nice it is that you can go back and forth all in one place. What you don't have are the subtotals. You can't easily see the net income number, the effect on the net income. So you got to have a trade-off. Do you want to be bouncing back and forth from the trial balance or the balance sheet and the income statement? It's easier to look through the trial balance, of course, because there's less stuff, less sub-accounts, but you don't have all that stuff, which you might need for analysis depending on what you're doing, such as the calculation of the total assets, the current assets, the net income, and so on and so forth. So we will be printing these out as we go, so you can check your numbers. I'll typically be printing out the trial balance. I forgot to do it last time, but I'm remembering most of the time. And we'll also make a backup file that you can use to jump forward in the problem as well. So that's going to be it for now. Let's get out of here.